Woo! Wake up, Web3. I'm trying to wake up. Excuse me a second here. Oof. Got some dry eye, some itchiness going on this morning. How is everybody doing? We're going to have some fun today. We're going to have a nice little conspiracy episode today. I hope you're ready for some fun. Mostly because there's not a whole lot going on in the price action. We're kind of neutral. I mean, there's still news, but as we have discovered over the last year and a half, good news for crypto or crypto products or, projects making partnerships or, things being announced that are good for a specific project are not pushing prices. So yes, Ondo and Sui and SEI and Link are all partnering up to do things. And yes, XRP and HBAR are being adopted by governments around the world. And what is the price doing? Not a damn thing. So yeah, that's not going to move the markets. We do have a market structure bill on the horizon. We'll talk about that here in a minute. And then, of course, we will talk about what the title says. Are they collapsing the dollar on purpose? They, and by they, I mean all of them, including, I don't care, right, left, love Trump, hate Trump, pro-communist, pro-capitalist, it doesn't matter. The people in charge, are they doing this on purpose? We'll talk about that here in a minute. First thing we're going to get to, as always, is the bubbles, my bubbles. So let me pull those up for us. They are right here. We're not going to play the sound because that would mess up stuff. All right, come over here. We'll hit the button. Let's talk about it. We are green on the day. Looks pretty good. Are we really green? Not really. Bitcoin up 2.3%, HBAR 2.3, XRP 2, Quant up 7, AVAX not bad, XTC, XMR, we mentioned them a little bit yesterday. Hype doing its thing. Render back up 10%. Are we over $2? We're almost over $2. Look at that. You got almost a greater than 10% pump, because a 10% pump would be 18 cents. I know how to move decimal points, because, base 10 is a whole lot easier than base 12. Anyway, moving on. That's almost a 20 cent gain from yesterday. Of course, for the week, you're still down 10 cents, which is 5% loss. All right, moving on. Interesting. Let's see anything else. Jupiter, the exchange or the DeFi platform doing pretty well. with tokenizing all the stuff. Found out today. I'm not going to pull up the post about it on X, but Robinhood is going to be doing tokenized stocks as well. Like, oh, Robinhood's doing it. Yeah, Jupe did it first. Thanks for playing. But Robinhood is bigger. And then, as Robinhood does it, I expect to see other traditional platforms to be doing that as well. Green on the month here. I don't know what River is. What is River? River's up 164 spots this month, still under $1 billion on the market cap. Let's see what they are. Let's go to CoinMarketCap and see what River actually is. River, coming on down. Yeah. I know. What is River? Top holders, wallet address. About River. River is building the first chain abstraction stablecoin system. River allows users to collateralize assets on one chain and mint on another. Morning, Ice. What do you think this means? Allows users to collateralize assets on one chain and mint on another. So if you collateralize something, that means you want to either sell it in pieces or take out a loan against it, more likely. So if you want to take out a loan against it, yes, thank you, Ice. Like and subscribe. Click the buttons. Do the things. If you're a tinfoil hat conspiracy person, this is going to be your episode. I hate that Reptar couldn't make it this morning. He's I don't want to speak for him. If you want to ask him in the Discord what's going on, and he can tell you whatever. But he's got stuff going on. So if I wanted to collateralize, so I wanted to put something on one chain, and then I wanted to mint. What would I collateralize? So if I wanted to collateralize my house deed, so I put my house deed on a chain and then mint on another. Like what would be the purpose of minting? What am I minting? I don't know. So yeah, that's River. That's interesting. Let me get back to the bubbles here. So that's River, up 7x on the month. Keep an eye on it. That's not a bad. Maybe worth digging into. If you understand what all that means, let me know. Let's go over here to the basic coin market cap. Let me refresh, make sure we have the most recent numbers. Get rid of that so you can see more. All right, here's ICE. What the River token does in common terms. It's the voting pass. If you own River, you get to help decide how the bank is run. You can vote on things like which new digital worlds the bank should operate in or how much the fee should be. You can lock up your River tokens to keep the whole system secure. In return for your help, you get a share of the fees the bank collects from its customers. The main thing the River protocol does is let you use your digital money on one blockchain as collateral to create new digital money on yes. So that's all in the comments there. Thank you, ICE. Thank you, AI, for the assist. Appreciate it. So that is an interesting token. All right. Market cap back over 3 trillion, which is good. Still barely into the fear. Bitcoin. Oh, look, still hanging out around 90. Oh, look, it's doing this thing. That's on the week. Let me go to the daily. So for the last however many days, not counting the wicks, 84 to 96. There you go. I mean, if you're playing leverage trade and playing between these levels, good for you. Best of luck. If you can read these charts and know how to read levels and how to bounce off of support and resistance, awesome, great. You got a chance to make some money while we chop around here. I'm not good at exiting a bad position. Even if I put in a stop loss, I feel like instead of stopping, I should average down. That's Anytime I've tried to leverage trade, that's how I always do it. I don't do that. Not good for me. But yeah, everything's just kind of hanging out where it is. Not Bitcoin, dummy. ETH, kind of same thing. So if we ignore the wicks and we put a line here, that's 27. If we ignore the wick and we put in a line here, that's 33. 27 to 33. 27 to 33. Okay. We do have the FOMC meeting today. Let's refresh and see if this is updated. Are they going to cut rates today? CME Group says 97.2% chance no. Of course, that hasn't changed. It was 95% for the longest time. So no rate cut is baked in. We need to learn to leverage trade. Like I said, I understand it conceptually. I just have a problem with the execution. Nice. Yeah, 97.2% chance, according to CME Group, that we are not going to get a rate cut today, even though inflation numbers are down below 1.5% and GDP is up more than expected. Powell's not going to do it. We're going to talk about why. Before I jump into that, because that's going to be the main rant today, from Crypto Rover, let me switch this to this. This week is one of the most dangerous macro setups we've seen in months. Yeah, there's a lot of things that if they break good can be great. If they break bad can be pretty bad. Trump is going to talk today at 4 on economic stuff. That's the Fed meeting is at 2. He's going to talk about economy and energy prices. If he calls for lower energy prices, which he's like, that's all he's been talking about. He wants gas to be cheaper, because if gas is cheaper, the cost to move goods via truck is cheaper. And if the cost to move goods is cheaper, then the goods prices decline again. That is one of the factors in determining the price of goods, is how much does it cost to get it to market? How much does it cost to produce? How much does it cost to get it to market? And how much do the producers have to pay in taxes on their gains? That is all factored into price. See, I told you, I'm not a financial advisor, but I did take Econ 101 and 102. And they did cover that. Guns and butter, y'all. Guns and butter. So we do have the Fed. Now, this is Trump didn't speak. Trump is speaking today. Sorry, this is saying from yesterday. But Fed decision rate is today. No rate cut or hike is expected, as we just showed. So it's going to be how Jerome Powell comes out and talks. If he talks in a way it's like, hey, we didn't cut this time, but here's some things that we like that we're seeing. So we're going to include, if the way he speaks seems to indicate that they're going to consider cuts, or if the way he speaks indicates they're not going to consider cuts next time, which is March, that will affect the markets, including crypto. BLS inflation metric not showing any signs of slowing down. Powell could continue. He's like, well, we're not seeing blah, 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 blah. Yeah. Typically, Powell has ignored any good news that would indicate, hey, maybe we should lower rates. And he has talked up, he has talked up any type of headwinds or negative news. I got a dog hair attached to my head there. It looks like it. Yeah, great. Anyway, he tends to talk up any kind of bad news as a hey, this is why we should not raise rates. Now, during the FOC meeting, or today, Tesla, Meta, and Microsoft have their earnings announcements. I would expect that if they're really bad, if they're within an acceptable range, then it'll be fine. If they're bad, I would expect that to drive some negative action. If they're good, if they're better than expected, that might have a positive effect. But I don't know that it's going to have a big push one way or the other. But we'll see. PPI inflation comes out tomorrow. This will tell. So that's great. So that today they're going to announce no rate cut, and tomorrow, if the inflation is down where they could have cut rates, then great. We got to wait another 6 weeks. Apple earnings on Thursday. If earnings weaken, the whole market feels it. Yes, but they have also that's also not going to be that people will know if they're going to be a little weak or a little strong. They know that ahead of time. They always do. Friday is the deadline for the Senate to pass the new bill. Like, they funded the government through Friday. The U.S. House has already passed a bill for funding. The Senate is saying they're not going to pass it because Democrats in the Senate do not want any funding for ICE, given all of the stuff going on around the country with immigration arrests and protests. And so the Senate Democrats have it doesn't matter if you give them everything they want. If there's any funding for ICE, they will be not supporting the budget. So they say. We'll see what happens tomorrow. So all of those things, and this is his conclusion, and I think he's probably right. Any of these go against the market, red candles for days. Yep, I just want to touch on this. Gold has hit 5,300, surpassing a $35 trillion market cap. Great. Does that mean gold is more valuable? Or does that mean the dollar is less valuable? I think it's a fairly simple answer. An ounce of gold, or in this picture, 1,000 grams of gold. An ounce of gold is still an ounce of gold. You can trade 1 ounce of gold for 1 ounce of gold. However, it will now cost you 5,300 pieces of green paper to buy 1 ounce of gold. Let's go ahead and get into why. We're gonna, 1,000 tons of gold. That's right. Look, they found more gold. Big surprise. Let's go ahead and get into this. I found this today. I read the entire thing, and we're going to go through this line by line. We don't normally do this, but this is from Peter Gurnis at Gothburs. Purports to be a currency strategist at the Department of Treasury. I have not vetted this guy. I have no idea if he is who he says he is. However, what he talks about is something we're going to talk about today. It says, yesterday, the dollar hit a 4-year low. The worst single day since April. April what? It's January, so April of 2025 of what? It's down 9% for the year. The dollar is at its weakest point since 2022. Let's see a chart. Well, I'll look it up on a different page here. That's 5 years. Okay, I'll pull that up for later. Nice. This should be interesting. I got the U.S. interest rates from 1954 to 2025. Okay. So the dollar is the way the president said yesterday, and this was in a interview. He thinks the dollar is great. I think the position of the dollar is great. According to our currency strategist at the Treasury Department, he is right. It is great for us. There's this document. You haven't read it. It's called A User's Guide to Restructuring the Global Trading System. The Treasury Department calls it the Mar-a-Lago Accord. So if I go over here and I type in Mar-a-Lago Accord, he's not making that up. That is a thing, okay? Written by the guy who now sits on the Federal Reserve. In case you didn't know this, Jerome Powell, I'm not sure if he's referring to Jerome Powell or not, because there's plenty of people who sit on the Federal Reserve Board. Jerome Powell is just the chairman. Jerome Powell was appointed by Donald Trump in his previous term. I believe they're appointed for 6-year terms. I could be wrong. We can look that up. But Jerome Powell's term ends in May of this year. I don't know if that's who he's talking about or not, but the person who wrote the Mar-a-Lago Accord now sits on the Federal Reserve. Before that, the person who wrote this ran the Council of Economic Advisors. This document, the Mar-a-Lago Accord, says to weaken the dollar on purpose as policy. We being the Department of Treasury. The thesis is simple, and this is the part I want to highlight and see what you guys think. I really would love comments, either in the live chat here or in the comments after the video. Definitely, I want to hear your thoughts on this. Let us know on our X page, get in our Discord. Like, this is something I think we should talk about. So I want to know what you think. A strong dollar makes American exports expensive. True. A weak dollar makes them cheap. Also true. If we want factories, we need a cheap currency. That is why companies went to India and China. It was cheaper for them in local currency. If we need a cheap currency, we need to so this is just if then. If we want factories, then we need a cheap currency. Okay, well then if we need a cheap currency, then we need to devalue our currency. Okay, if we need to devalue, then we probably better do it slowly so no one notices. So yeah, until they do. Yesterday they noticed the Swiss franc hit 15-year highs. That means compared to other currencies or compared to the dollar, he doesn't spell it out here, but the value of the Swiss franc to the dollar or to the euro or whatever is higher than it has been in 15 years. Gold has hit all-time highs. We just talked about that, $5,300. The yen strengthened because they raised interest rates. Remember that? The euro strengthened. Everything strengthened except for the United States. That is the plan, according to the Mar-a-Lago Accords, according to this gentleman or lady. I don't know. People ask if I'm worried about the decline, about what it means. I say I'm constructive. Constructive means the plan is working. Here's what nobody tells you about currencies. They are not markets. That's true. Currencies are not markets. Currencies are policies. I think we've all figured that out over the last 5-6 years. Currencies are manipulated by the people in charge of the government, or in this case, the Federal Reserve, which is allegedly not the government. But does the Fed control the government? Does the government control the Fed? That's a different video. We need to do a dive about the creation of the Federal Reserve. Anyway, currency manipulation is policy. It's not free market economy. It's policy. Central banks don't observe exchange rates. They create them. Like, this is all self-evident, right? The Federal Reserve is creating the interest rates. They're not observing them. Central banks aren't going, hey, okay, so the exchange rate between the dollar and the Japanese yen is this. They go, no, what do we need to do to the US dollar or the Japanese yen to make the exchange rates what we want? That's what they do. So the rate check we did on January 23rd. So that's what we did with the Japanese yen. The Federal Reserve did what's called a rate check, and just look that up. Ask Google or ask ChatGPT to explain that. The Federal Reserve didn't go, oh hey, look at this. The rate check is this. Nope, they intervened and made it. We called the trading desk. We asked for prices. The market understood. The dollar dropped. Mission accomplished. We want a weak dollar, according to this person allegedly from the Treasury Department. The Secretary wants a weaker dollar. The President wants a weaker dollar. The Accord says make a weaker dollar. Everyone agrees, except for the people holding dollars. That's you and me. That screws us, the little people. But We don't get to vote on currency policy. Yeah, we're on the backside of this. We observe currency policy. We observe exchange rates. We don't create them. We just are affected by them. So this is what the weaker dollar means. Importing costs more, right? Price of goods coming from overseas goes up. Your purchasing power declines with the US dollar. It takes more dollars to buy that thing from China. Your savings buys less. Yes, we've experienced it. We understand that this is inflation. Your vacation's more expensive, your electronics cost more, your gas costs more, your groceries cost more. That's not inflation, that's competitiveness. Okay. Calling it something else doesn't change what it is. Anyway, 1971, Nixon ended the gold standard. We know that. Temporarily, 55 years ago. Temporary, yeah, still temporary. $1 bought $1 worth of goods. Just for the sake of argument, today, $1 buys 12.5 cents worth of goods. So it takes $8 to buy the same good it did in 1971. Okay? So another way of saying it is we've devalued the dollar 87.5% over 55 years at 3.85% per year compounding. Duh. That's why they say their target inflation rate is 2%. Okay. That's a 700% cumulative inflation. That's not a bug. It is a feature. Debt becomes cheaper to repay. Not my debt, not your debt, government debt. Okay? Government debt. If you own things, you win. If you earn things, you lose. We showed a graph, I think, last week about the last person to see the wage increase. The last thing to move is the wage increases. That's monetary policy. This is what you need. Take this home. If you own things, you win. If you earn things, you lose. The dollar bills that it would cost to buy my home is 150% of what I bought it for. I still have the same home. You know, I've painted a few things. We've updated some design. You know, we've done a little bit of remodeling. But the paper, like, it's still my house. It's still the same square footage. I haven't upgraded the house. I haven't added to the yard. It's like everything's the same. My house is still my house. However, the pieces of paper you have to give me if I sell my house is 150% of the pieces of paper I had to spend to buy the house. Technically the bank owns the house because I'm still paying the note. However, if I paid off the note, I'm paying off the loan that I took out when I bought the house. So okay. Here's some numbers. This is not what I paid for my house, but here's some numbers. I bought my house for $400,000. Okay. I took out a loan from the bank for $400,000. I am paying a loan for $400,000. If I sold my house right now, I could sell it for 150%. I could sell it for $600,000. Cool. That means I made $200,000, right? Kind of. Can I buy $600,000 worth of goods if I were buying them, or are those same goods that would have been $400,000 worth of goods 10 years ago, are they now just cost $600,000? Yeah. Do I break even? Yeah, roughly. My house is my house. My $600,000 of money that I get for selling my house buys the same amount of money, same amount of goods and services that my $400,000 bought 10 years ago. However, if I just had $400,000 from 10 years ago, can I buy $400,000 worth of goods today? No, because my currency is devalued by 50% or 10%. You tracking? I own things, I win, or I at least break even. If you earn things, you lose because your dollar's worth less. Great, you got a 2% raise this year. Congratulations. Inflation was 4.5%, 6%. You lost. So the national debt is on 100% of GDP currently. 400 made a nice number to 50%. I could have done 200 and done 200 and 300. I just picked a nice number that made sense. Any even number, I guess, would have worked. Yeah, and there's a difference between a $400,000 house in California and a $400,000 house in Florida and a $400,000 house in Wyoming. So anyway, not the point. National debt will be 134% of GDP by 2035. How do you pay down 134% of GDP of debt? Well, the good news is you took the debt out now. Money's worth less in the future. Yeah, tell that to my sugar mama. That's right. In case you don't know, my wife is the breadwinner. I am the stay-at-home mom. I freaking love it. It's the way to go. If you can have a single income family and one partner can take care of the kids, get them to all their stuff, take care of the house, prep dinner, take care of the dogs. Like if you are in a position to be able to do that, it is wonderful. Yeah. Or in Tennessee, that's right. Tennessee, no state income tax, but we're full. No, I'm just kidding. If you want to better your financial system, the cost of living in Tennessee is wonderful. I live on the eastern side. I have the mountains. They are beautiful. If you like great food and good culture and good music, you have Memphis and the west side. If you want, good city living. If you want something kind of in between, Nashville is great. I grew up there. Tennessee is wonderful. And most importantly, no state income tax. There is a state sales tax anywhere, depending on, because municipalities can also add a little bit to help fund themselves. Anywhere between 9 and 10% sales tax. But let's be real. A sales tax is a consumption tax, and if you consume more, like wealthier people consume more than poorer people in general, then you pay more in taxes. How about that? Anyway, back to the rant, back to the conspiracy here. You inflate. How do you pay down 130%? How do you pay down 134% of GDP in debt? Well, that's great because, like my house, I get more money now than I did then, but the money's worthless. But it doesn't matter because I'm paying a note on that lesser amount anyway. So you devalue the currency that is denominated in. You make the number smaller by making the unit smaller, right? That's not a default. That is monetary flexibility. They just come up with fancy words to cover what they're doing. So consumer confidence, 2014 lows. So we've been here before. People feel something is wrong. They just don't know what it is. They just know things cost more. They know their paycheck goes less far, right? Everyone feels that. The reason I like this guy is that all of this stuff is self-evident. We can read it and go, yeah, that is right. I am experiencing that. So we know something's broke, but nothing's broke. It's working as intended. Okay? 89% of economists agree if the Fed loses independence, risk premiums go up, treasury yields spike, borrowing costs explode, growth slows. So we're very careful. We don't say we're taking independence. We say we're rethinking coordination. See, it's just about labeling. You use different words so people don't panic. Same outcome, different press release. The president said he could move the dollar like a yo-yo. He did say that yesterday. Those words came out of his mouth, up or down. He's not wrong. He could do it. Currency is a policy lever. We pull it, you feel it. This is something to note. Sweden's pension funds, Denmark, China, they're selling their U.S. treasuries and buying gold. They've been buying gold for years. Gold buying ramped up recently. Why? They read the paper. They know what we're going to do. There's a term in the markets now, sell America. It means foreign investors are reducing exposure to the US dollar, to our stocks, to our bonds, to our currency. They see what we're doing. They are protecting themselves. You should too. Gold and silver, great hedges against inflation if you bought them before. You know what else is a great hedge against inflation? A finite supply cryptocurrency. Gold is at $5,000. Silver's at $110. Bitcoin is at $89,000. They aren't bubbles. They are exit signs. People are leaving the dollar, not because they hate America, but because they read the playbook. Oh, if this is what they're going to do, I know ahead of time, maybe I can plan appropriately. Okay. This is the goal. We transform the dollar from strong to competitive. When Trump says the dollar's doing great, he means it. It's doing exactly what the plan is. It's going down. It's doing great because he wants it to go down. It's part of the plan. Great. That's great for the government, for the country. I understand on the macro country scale that they need a weaker dollar because it helps them pay the debt with cheaper money. It helps entice businesses to come to the country and build and hire people and make cheaper goods here locally. Cheaper goods here locally means our United States goods are more competitive with other countries' goods. I get it. But you know what? That doesn't help my dollar's purchasing power. Purchasing power of the dollar since 1913. Calling it starting at 100, it ends at 3. A 97% decline in purchasing power since 1913. What happened in 1913? Anyone? I'm going to give you a second. Ice, do you know what happened in 1913? I'll wait. December 23rd, 1913. Anybody? Very good. Very good, Ice. Yeah, you weren't supposed to notice until it was done, but you noticed. But it's already done. It was done in 1971. Everything since then has been execution, 3.85% per year, compounding for 55 years and counting. I think it's great. That's what he said. That's what we think. That's what the Accord says. That's what the policy achieves. The dollar's doing exactly what it's supposed to do. It's declining slowly. So slowly you think it's natural. I'm sorry. Why has the Fed Reserve's policy been, you know what? We just want to target 2% inflation per year. Why? That doesn't help me. That doesn't help the average person in the United States who gets paid in dollars. So who's it benefiting? It sure as hell ain't you and me. Yeah. Part of the plan, guys. Part of the plan. The good news is, well, the bad news is you and I have zero chance of changing that plan. I don't care who you elect. I don't care how hard you protest. You're not changing what's happening. The good news is if you know the plan, you can plan accordingly. Or you can absolutely plan to own nothing and be happy. Go to your job that you enjoy, make enough money to pay your rent and to buy groceries, and go out to eat and play on your PlayStation or your VR headset. And look, you can live a very happy and fulfilling life. No problem. That's fine. If you want a little more sovereignty, financial sovereignty, personal sovereignty, a little more freedom to do things that you want, as you want, and when you want, plan accordingly. Just plan accordingly. All right. So that was a 35-minute rant. I hope you enjoyed it. I hope you are thinking about what you want. You know what they're going to do. They've told you what they're going to do. You can see them doing it. And you go, okay, they said they were going to do this. Now here they are doing it. What should I do? You should do some research. You should figure out what you want. You should figure out how to get there. What are your best options for getting there? I think crypto is one. Do I have any memes? I have one. I have one meme for you. Where is it? Oh, this is not a meme. But yeah, you hear about the guy. You can't see that because I turned off the screen share. Hang on. Here you go. Yeah, I hear about the guy who put $500 into a meme coin and made $100K. But you don't hear about the hundreds of people who put in $2,500 and are now left with 19 cents. The guy who put $500 into a meme coin was the pre-sale buyer who's friends with the person who created the meme coin. Yeah. Anyway. Good luck. Plan accordingly. Okay. Chompy, take us out of here.